The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, so come on back here to the Diagnostic Trading Hour. I'll go ahead and get my screen resized through there. I just realized that we had not resized it yet. But hopefully you're doing great today. Things are going well for you in the markets. We had Yellen out there talking and moving the markets around for us. Got some nice moves up, some nice moves down. And so moving, down, up, down, although basically a big yo-yo going on. And basically a great environment for trading. So, like I said, I hope that has went really well for you. And if so, then awesome. If not, you need to be checking out things like Nadex to help you out in these crazy volatile markets, because it will help define your risk in your trades. And it just sets up some incredible risk-reward opportunities that you would not have normally otherwise. And otherwise normally. I'm not quite sure which way that goes. I'm a trader, not an English major. All right, let's see. We got the S&P's up 2.5 points. We got the Russell is down 10 right now. So just like I said, some nice bounces going on. We got the Nasdaq currently down 40 points on the day, and we have the Dow up 80. So take your pick. Right, which way are we going? Right now, everything pulling down pretty solid. Let me pull up a look at a few of these charts right now. We got, let me pull the Russell up, and I'll open a couple others in the background. And let's see here. While that one's going, I want to open, like I said, a couple more for us. That way we'll have a nice variety. And we can walk through them all. All right, so the Russell this morning, and backing up on that was, like I said, heading on down there. It's like a couple more charts are opening up. There we go. And let's see here. It's taking one more second than I thought it would. All right. So there we go. All right, so we got the Russell moving on down on Yellen's comments. She starts talking. Market starts going south before she even gets on the air. And then it keeps going down, 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 down. Boom, we get a nice pullback. Basically, a pullback from the one deviation. We get actually a full deviation pullback all the way back up. Didn't quite hit settlement, but from low to high, it is a one deviation move. I mean, it is a, like, to the tick, one deviation move. Perfect turnaround, going right back down. And heading right on back down to minus one deviation. I'd be looking at 1091.1 right now. And so I don't know if we were looking at that. What could we look at on, say, Nadex? Let's check it out and see here. And we might, who knows, we might have a trade. But let me pull up the scanner for you. We'll look at that one. And I mean, it could also, obviously, it could always bounce, but is there a low risk, simple entry, trade? That's sort of the idea that we can take advantage of. And I want to put it on the screen over here. One more second. Okay, there we go. And so, when we're ready for that, we want to get, a high volume bar, maybe breaking expectations. But let's just look and see what would be the possibilities as of this moment. Okay? And then after that, we'll come back and analyze if we actually want to do the trade or not, and go from there. Okay, so with that being said, we got the Russell. So one option would be, spreads. The other one would be binaries. If we go down here, let me unselect the CAD there. And get rid of natural gas. All right. So we got the spreads. Let's also look at, like I said, the binaries. And I can open both of them. I'll just go over here and copy and paste this over. Click on the binary scanner. And we'll see what we're getting. There we go. Okay, so yeah, we burn out on most of those. Right now we just got basically premium collection going on, going south. But if we were going to target 1091, what would be there? Trying to see if we have something. Okay, that gives us an end of the day. That gives us like 2 hours. That's actually not a horrible trade right there. We got, 1090, 1092 right there for about a $25 risk. So that's a possibility to look at. I want to see if we get some, movement going in the other direction for us first before I just grab it. Because right now I'm just seeing some positive volume here. Let me also look at the NASDAQ right now. It's literally bouncing off the 1 deviation level. So you can see right here, it came on down, hit 1 deviation. It did not make the full retracement like the Russell did. So the Russell, it ran all the way back up a deviation. The Dow even went down. It went down to basically 0.5 back up to 0.5. Basically made a deviation down up move. The NASDAQ actually did not make that full recovery like the Russell did or even the Dow did. And we could also go over and look at the S&P. Check out where it's at. And the S&P looks like it moved on down 0.5, up 0.5. So it made a deviation move down from the high, a deviation up from the low. And it's pretty much oscillating right now at settlement. So it's chilling out a bit at the moment. And we're pretty close here to the top of the hour. But we're getting a little bit of strength on that. Yeah, I need to see some commitment right now. I see everything wavering a little bit. But that would be as far as a short trade, 415, targeting that close to that 1091 level would be, an area I would consider. I need to see more than just that pullback because, you're talking about a triple. And we do get triple moves. We do get triple deviation moves, like 1 down, 1 up, 1 back down. It's really a 1 deviation move on the day. But usually we don't get them that fast. So I need to see some price commitment. All right, I just want to see if there was a trade that was just maybe sitting right in front of us that we could grab. Because if there was, then, obviously we'd be all over that. And I guess we could look and just see. Maybe we got 15 minutes here. We might be able to pull off. I'm just trying to see if I can find any just quick trades for us that I'm comfortable with. Okay, one other trade we might look at. We might pull up maybe a gold chart. Gold's been moving huge. So right over here, go down, check out gold. We'll look at, let's go into 8 tick size here. And then we'll open that on up. All right, so let that come up. See if we can see a potential trade set up right here. Once that's open, at the same time, we'll be able to go over and look at the scanner. All right. So we got gold moved huge, right? So it moved all the way down 3 deviations on the day. Just a massive, massive run. It was already down a deviation or 2 before Yellen got going, and it started heading south last night. And really, you could almost say it moved 4 deviations because it actually ran up a deviation this morning before it came on back down. Just an incredible move, not just from last night, but check out this morning. Let me zoom in on that. And just what you see, this thing's just moving awesomely down. Comes on down, back from one deviation back down to settlement, keeps dropping down, drops another deviation, just oscillates. You can see that, this boom, boom, this perfect scalping area, right? Oscillates right there. And all that was, that was seconds. It's like, basically what happens is they release the report, the red statement. And, it just goes nuts. My bars are, the way I set them up, I don't get a new bar until it's moved 8 ticks, okay? And 8 ticks up or 8 ticks down. And look at all this price action. Okay, this is all within a second. Okay, well, let's see. 1, 2, 3, 4, okay, 5, 6, take it all the way up, but basically to this last one, or 5 seconds. So literally from here to here is like 5 seconds. That's how much price action took place right there on gold. It was just like, couldn't figure out what it wanted to do. Finally, it figures it out, okay? And keeps going down, which is not a surprise in that kind of action after already dropping. And keeps dropping, and then we get another solid deviation and a half move on down. At the moment, what do we got going into this final hour? We're not really exceeding expectations at all on volume. I like to see some excessive expectation. Like basically what I do out here is I got actual volume and how much volume I expect to happen in this 4-minute period. So any given, the most recent 4-minute period during that tick move. And let's see, let me pull up. Let's be ready in case there is something that pops up, okay? Let's go over here. Let's look at gold. Said want to be ready for it. In case it does come on up, and because you never know, man, it could just start moving right there at the last second. And let's choose. We got the gold market selected. Scrolling down here, I'll zoom out a little bit so we can keep both in view. And let's see what we can find. All right, now, we'd have to have a close down and a break below it. It could move up. It's got to move up quite a bit, but if it exceeds, then whatever. Right now, we're sitting at 1289.2. Okay, that's where the market is. So if all it'd have to do is move up, about 8 ticks, 9 ticks, 1290 would be in the money, right there. But like I said, there's no volume confirming that, so I'm still waiting. I'm looking for a potential drop down. Stay right there. We'll be right back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, we're just sitting back and patiently watching and seeing if anything's going to happen over here on gold. Is it going to fly up or fly down or just stay flat after that massive move that it's had today? It's moved, like I said, 3 deviations. It's pretty exhausted, but it's been pretty crazy what I've seen happen in the last 5 minutes in gold. So I'm not saying the last five minutes now, but just what has happened over short 5-minute periods in gold itself. And so let's see here. We'll see if it pops on up. I mean, it seems like it's trying to go up, like it's trying to pop up past that 1290, and we haven't. I mean, it's been going slow. We're not really making a lot of progress at the moment, so it's hard to give it a lot of strength there. Just saying, just watching the price action, it keeps pushing up, like it wants to run up right in that last pit session close. We'll see if it does. If you wanted to do a trade on that, you'd be looking at about a $17, $16.50 risk right now. So, pretty low risk on that. It's close, but, ideally you have volume confirmation in the direction of the bar. And so that's what I don't like about the trade. I see the trade as a potential trade, but, you really want those best setups. And to me, the best setups are, like I said, when a bar closes in a certain direction, and then that bar is broken, the higher low of that bar is broken, and it's done so with volume, then you can look to get, maybe those 4, 8, 10 ticks, maybe 20 ticks, depending upon the size of your bar, that you're hoping to accomplish. All right, so that ought to, help you there. And let's see, I'm trying to see if there's anything else that could be helpful as we put all these different pieces together. So far, there's just nothing there. Just watching. It's just slowly ticking. I mean, who knows? Maybe it'll drop down really hard in the last few minutes. So, all right. Well, that's sort of boring at the moment. We'll have to move on. And I'll keep it up on the side. We'll see if it does actually go anywhere. But so far, no volume confirmation, no trade, okay? We go back over here, we'll get the Russell. Russell's starting to give us a little more encouragement on moving on back down. It's finally got a down close. Again, no exceeding volume, though, right? We want that exceeding volume to be happening. And we started to get a little bit on the back here on the upside, but nothing massive on that. NASDAQ was, last I checked, was bouncing off that -1 deviation level. Let's pull it back up. Let's try to see if we can find anything going on. It's bouncing a little bit right now. Sort of in the same, almost as the Russell there, sort of in the sense of the pattern at the moment. You're just coming on back down, bouncing up a little bit, oscillating around. And let's see here. All right, so we got that, and then we'll look over here at the Dow. And the Dow still just staying on up there. I use a little bit larger bars in the Dow, but as you see, volume exceeding expectations again and again and again. Just pop, pop, pop. These are 26 ticks. Okay, so we're talking about, volume exceeds expectations in the direction of the bar. I go in, and I usually am looking to take basically 2 bars, which is really going to equal 26 ticks because they're about half the size. So, after a couple ticks there, you got 24 ticks. You repeat that. 1, 2, 3, 4, 5, 6, 7, 8 times in now. It's like this last one is oscillating. So we got 7 that we've taken profit on. And 7 times 24 ticks, and, we can do the math. I mean, it's just, like I said, it's really simple if you just wait on it, if you be patient. But 7 times 24, and that times, 5. It's like $840. It's not, it's not massive, but it's also not bad for, just going in and taking some very, very simple trades. And to give you, time zone or time, we're talking about in the last, this is hours. So, 10, see that right there, 30 minutes, 40 minutes, but one of these range boxes right here is an hour. So, you got, let's see, 1, 2, 3, 4 of those in an hour. You got a couple in the last hour, plus you had the ones on the downside in the last hour. So, quite a few of them. And, the Dow, the bars are huge that I use just because it needs that, but when that volume goes, man, it's like I said, it's just an easy scalp. Go in and grab 25 ticks. All right, stay right there. We'll be right back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And, all right, so let's catch up on the other markets as well. So the gold just doesn't do anything and just sitting there just watching it, staring, nothing going on. It finally just started to move a little bit. Everything started to move a little bit there after that gold closed down. But, it started breaking low finally. And so in the gold futures, I mean, it did finally break expectations. We go down here, expectations, that bar didn't, but this bar right here, we got, what did we get? In the last 4 minutes there of that bar, we got 700 contracts on expectation of 400. So now we ought to see that move on down. All right. So that's well in progress. What else is going on that we can use? And let's see here. What do we got? Well, we got silver moved on down 1.6. Gold moved down 1.6. Natural gas moved down 1.6. Copper moved down 0.8. So it was slow, but it's a big moves there. Oil up $1 on the day. So oil inventory day. There we got corn is currently down 1.2%, down 6 points. We got soybeans down 13 points. That's a 1% move on soybeans. Nice move there. We got euro dollar down just a mere 15 pips right now as of the moment. Aussie dollars down 15, pound dollars down 12. Dollar franc is up 10 with the dollar CAD up 8. US yen is currently, US yen is up 8 pips on the day. We got Aussie yen up 1. And I got that backwards. US yen is up 1. Aussie yen is down 15. Euro yen is down 3 with the pound yen down 7. Euro pound is up 3 pips on the day. Euro CAD down 2. Pound CAD flat unchanged on the day. Okay, so with all those pieces put together, let's see what we got here. And maybe, let's just go over the news plan. Let's make sure you got that set up. I know some of y'all are waiting for that piece of the plan over here. So let me pull it up and load it in. We got, okay, so tonight we're going to have the employment change report happening. That's going to be our main thing to look at. And then we also are going to have the interest rate announcements for the pound, for the euro, and the ECB press conference coming out tomorrow. And Yellen is going to grace us yet again with another economic outlook where she's going to be testifying before the Senate. So that'll be happening tomorrow at 9:30. And then we'll get the policy statement from the Aussie. It's going to come out at 9:30 tomorrow night. All right. So, anyways, make sure you put that 9:30 a.m. Yellen testimony thing going on. It'll come out in 2 parts. She'll read a prepared statement. The text version is made available immediately when it starts. That's why you see all that movement right there off the pop. Then there's going to be Q&A. You don't know what the questions are going to be, so there can be, some unplanned volatility. Well, let's look at what we got over here that we can use to help us trade the news here coming up. And let me open a couple things. Little engines I got starting to build for analyzing all this stuff, making it easier. And, okay, so big news announcement tonight, the employment change for the Aussie. And let me pull that up. We'll go into it. All right, usually a pretty good mover. So let's just make sure that it's going to be good enough, fast enough for any kind of trade that we want to do. We got about 55, 55, 65, 75, 35 pips, 50 pips. By the way, all these moves I've talked about so far have happened by 10 o'clock. Looking on over here, and that's based on 30 minutes after the release. So, yeah. Okay, so all these are within 30 minutes of the release so far. It's like one of them is an hour after, just because of the time zone change. So I'd say, yeah, we went 11 o'clocks, okay, on the trades, just looking at them. If you want to get that max move. All right, let's see. We got one that was a 30 up, 20 down. That was a slower one. 70 pips. One that went down about 40 and then went back up. So that was a pretty flat one. One after that, we got about 50. Then we got a solid like 70, 80 pip move on that one. 80 pip move. Okay, so this is a straddle strangle ideal trade, okay? If you're looking at 11 o'clock for your expiration on the trade, you are going to have to take profit on this trade. You're going to have to be very careful on this trade because it will come right back. All right, so the first one moves like 55 pips. It comes back 20. Okay, like down to 20. So you go like positive 50, negative 30. So you basically are up 20 pips. The second one ran up, and it came back about 25 pips as well after the move. Both of those big moves, by the way, happened in the first 5 minutes, maybe even the first minute. You could say 5 minutes. So you've got about 5 minutes of movement off that report, and that was most of the maximum move, literally right there in that first 5 minutes. So I would say it was very safe to trail probably 5 minute bars if you get that move sort of out of the gate. Now, I mean, if you can get close to 1-to-1 at a 50 pip pop, you could take it. But there's a good chunk of these that they literally just run. I mean, I'm looking at like over and over and over again, they take off. There's probably about 4 that sort of pop around and move around. I'm trying to see if those are ones that actually would have made us a lot or not either way. One of them popped up if you would have trailed it to the next 5-minute bar, you probably would have got out at somewhere around break even. Another one popped up. If you would have trailed it, it actually ran up 60 pips. It came back down 50, and then by 11 o'clock, it ran back up to the 50. Let's see. Another one wouldn't have mattered. Other one, you actually would have made even more by trailing it. Let's see, one other one ran up about 40, and then just came back down to about negative 40. So, either way. But on the big movers, like if it pops, I guess this would be the best way to put it. If it really pops, and then you can easily trail, okay? Meaning put it at 5 pips and move it on up, or just take off your profit at close to that high, but definitely trail that on up. Like I said, expect 50, but I'm seeing this thing move 60, 70, 80 many times. So that's sort of why I like the idea of trailing. You might be able to grab 10, 20, 30 more pips. If, in all cases, okay, then just about, let's see, but let me see if there's like an exception. Yeah, there's quite a few that will pull back, but not enough to make it worth condoring, because some of them just won't do it. Like they'll pop and just stay. So it's really not a great condor trade, unless you can get like $70 or something like that. Maybe if you get $70 or $80 on it, then I would condor it, because that would be like it barely ever breaks that level. Like I think once or twice has it broken 70 pips in the last 12 months. So if you get condor at 11 o'clock, that you could get in as early as 6 for $70, that would be worth it. Otherwise, now you can get in later too, but the earlier you get in, the more premium you will receive. So as early as 6 for 11 o'clock, condor for 70, or when you get close to that, within 30 minutes or so, so sort of like close to the top of the hour, around 9 o'clock, then be looking for, you could look for a 10 or an 11. The reason I say you could actually look for a 10 o'clock, like either strangle or straddle, is because the majority of the time when the pop happens, it happens in the first 5 minutes. So I don't know how much more value you're really going to get out of an 11 o'clock move. There are a few times where it took longer to get there. But, a good chunk of the time, like it made the majority of the move literally in those first 5 minutes. So 10 or 11 o'clock expiration. Enter at 9 o'clock for a straddle or strangle. And really, you want to be looking to get in on a straddle or a strangle for, I'd say, at least, or no more than, I guess would be a better way to put it, no more than $30. Okay? So 35 would be like a top, like cap, and that's if you're planning on trailing the thing a little bit. Ideally 25. So I'd say a range of 25 to 35. When it gets to 50 pips, you better be watching deviation levels. You better be watching volume on 4-minute bars, exceeding expectations going the other way, to see if you need to take it off. Straddles are tougher because you got to exit because they can just fly right back on you on these news reports. So again, quick summary: enter at 6 for 11 o'clock if you can get 70 to 80 pips in premium. If you can't, don't touch it. For the straddle strangle, enter at 9 for a 10 or 11. Ideally, let us say less than $35. Ideally, $25. Okay, and that'll cover your employment change trade for tonight. All right, let's go on over. We also had oil inventory. It came out, and we had a negative 1.8 in inventory, expected 0.9. So that had a nice little impact on the markets there. And pull it on up, and we'll check out what kind of move was that, okay? And all right, so looking at the oil report, make this a little more legible and stretch it out a little bit. Okay. It's like you can tell where the move came out because you see that just that big pop. Now let's check out what kind of move was it. Inventory went down, therefore price went up. That's actually makes sense. They don't always make sense. And we got a pop right up here. $1.12 move. Nice move. Also hit right at the deviation level, just like popping right over and just oscillating before it pulls back down. And remember, oil inventory comes out the same time every week. So we can look at, was the volume normal for this time of week? Was the range on an hour normal? And I could even go in and look at a range like on a 30-minute time frame. Okay? To go, okay, on the ranges, high to low. 30 minutes, because why? Because the report comes out at 10:30. And so put all that on there. And that can let me sort of, just get an idea of what kind of move I should be looking for during that period of time. Volume was pretty normal right off the release. It picked up a little bit late into it. And as you can see, once it picked up, it actually exceeded its expectations during that hour. Then it backed off. And really went flat, actually flatter than normal for the expectations. Now this hour was pretty normal, but most of the hours right there it moved up. It used a little bit extra up, so it didn't have it left for later. But we got a nice big move, like I said, right to one deviation. So we shouldn't be surprised if things go flat. They usually go flat and oscillate. Sometimes, if we get strong volume in the other direction, then we'll get that reversal off the deviation. So I'm more going to often to do usually premium collection off those than anything, unless I have, something else like an MVP reversal or something of that sort to help me out. But anyway, so a really nice move right there and right to deviation level. Let you know, hey, time to take off profits. Volume exceeds coming back down. Okay, definitely, if this low gets broken, we're watching. But yeah, okay, take it off. So either you're out already, or you're out because of the deviation. If you get out because of deviation, you just trailed, which is one of the most common methods, is once you hit a deviation level, just trail your stop, at least to the bar that broke it, that closed above it. Either touched it or closed above it, your choice. But by doing that, you very, very simply, very easily, and that's time-based bars. I wouldn't use diagnostic bars for that because they're just too tight. But time-based bars, you can trail those right up there. And help you maximize that. Would have got you out right near the top, at about 100 on oil with a high 100.12, just by trailing right below the low of the bars once bars had touched and exceeded the deviation level. And so a pretty simple method for trailing. Most common method I use is actually 10 minutes. And I love using 10 minutes on volume. I like using 10-minute bars, really for my volume analysis. But anyway, so we'll review maybe some more of that tomorrow. Maybe we'll talk a little bit about more of the oil trade and some ways to look at doing it on a weekly basis coming up next week. When we get back from this break, we'll do a quick review on the interest rate announcements coming out in the morning on the pound and the euro. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so looking at so we got the pound one, and we're talking about it being pretty flat. That usually is not a big mover, okay? If we go and we look at the pound, I mean, we have one big move. Same thing on the euro, one big move, okay, on that release. So when that release comes out at 7, I'm actually looking for an 8 o'clock expiration on the pound. And you can start as early as 6. You could even start earlier if you wanted to. Usually I start at 6. But for an 8 a.m. expiration, same thing on that minimum bid rate coming out of the euro. 8 a.m. expiration, neutral trade. You're talking 15, 20, 25, 30, 5, 2. There's one time where there was a big surprise in the market where they dropped the rate, where it moved like 120 pips, okay, in that 30 minutes. The rest of the time, I mean, you're talking 5 pips, 10 pips. And a lot of times you can go in there, you can get 30, 40, 50 bucks on this trade. I'd be looking for 35 or more for that 8 a.m. expiration. Now, it is important that you do choose the 8 a.m. expiration. Okay? Because, why? Because often we'll get some volatility on the euro dollar after that news conference comes out. That's where, when the moves happen, as far as on a consistent basis, that's where they usually happen, okay? And it usually does move quite a bit. Looking back over the history, I mean, we got a 50 pip move. We got a 116 pip move. Okay. I mean, we're talking by 11 a.m. We got, and I like 3 p.m. if I can get it, but, 11 or 3, I'm really looking for in that press conference because it takes a little while for it to all get out there. Okay. 40 pip move, 90 pip move, 75 pip move, 170 pip move, 100 pip move, 78 pip move. They had one that's sort of flat, goes up 25, drops down 35. You'd basically probably lose about $15 on that one. 109 pip move, 120 pip move, 112, 90 pip move. This is probably one of the rare straddles and strangles that I said I'm looking for. Like, I don't want to do like right at 10. I mean, you can do 10, but check out like 10, 11, 12, like 10, 11, 3. Look at all of them and try to trail them. This is one of the few ones I will ever not just take my money off the table. Okay. Because usually it just keeps going and going and going. And so I want to have a nice profit. I mean, at a certain point, you may like at double, take off half. That's a wise thing. But definitely, have it, whatever trailing method you use on your normal trades, be a good method to potentially use. I don't know what your method is, but, ideally, if you can trail this, you can make a lot more when you get those nice big ECB moves. Okay? Again, the mover is the press conference. It's not the bid rate, unless they surprise us on the bid rate. And they've done that once in the last 12 months. Could it happen again? Yes. But 11 out of 12, it didn't. Therefore, if you want to play your probabilities of profitability, then I'd be going for neutral trades, iron condors, type trades, going into the 8 a.m. expiration. And for both the pound and the euro, both of their interest rates. And if you play it each time, each release, like I said, 11 out of 12 over the last, year plus here, because it's not exactly every 4 weeks, then you would have been profitable. All right. So hopefully you picked that up. You got some straddles and some strangles. On the Aussie, you got some straddles and strangles over here on the ECB, and you got iron condors on both. So take advantage of it. Check it out. Get a Nadex account. I'll talk to you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.